This is one of my favorite podcasts that we've ever done. I had my good friend AJ Osborne on, and he is a serial entrepreneur who flips businesses. But on top of that, he's got 2 million square feet of storage space. It's absolutely insane what he's created and how much momentum his business has built. On top of that, he's got a crazy story about what it was like being paralyzed and coming back from that. So it's an awesome, awesome podcast. Make sure you stay till the end because we actually dive deep into the storage units at the end. So make sure you stay there. Now let's jump into it. Are you looking to grow your real estate investing business? My company, Future Flipper, can help. We've taught hundreds of people all over the country how to flip, wholesale, and buy rental properties. And it doesn't matter where you're at in your investing journey. Whether you're trying to get your first deal or scale your company, Future Flipper can help. We have courses, coaching, and events for all levels of investors. So if you want to take the next step, go to futureflipper.com and book a free consultation to see how we can best help you. Once again, that's futureflipper.com. If you've ever wanted to invest with me on my real estate deals, it's now possible. At Pineda Capital, we're purchasing value-add real estate all across the country. This includes multifamily, commercial, and land development. The best part is, with my network, social media presence, and marketing strategies, we're able to get the very best deals that others don't have access to. You can join in with me on those deals if you're an accredited investor. If you want to learn more, head over to pinedacapital.com to see our current opportunities. Once again, that's pinedacapital.com. Welcome to the Ryan Pineda Show, where our mission is to invest.
I only expect to make money in things that I understand.
Innovate.
It's about believing in the future and thinking that the future will be better than the past.
And inspire. I am much more likely to hit my goal just due to putting it out there.
You're now rocking with the best.
What's going on, everybody? Welcome to another episode of the Ryan Pineda Show. Today, I've got my good buddy who I met in Maui a couple of years ago. This man has over 2 million square feet of storage space, comes out to like over 10,000 doors. He's also a serial entrepreneur, somebody who likes to buy and sell businesses, something that has always interested me as another entrepreneur. And he's just really killing it in all aspects of life. And he's got a crazy story about some hardships he went through and now where he's at today. This is none other than my good buddy, AJ Osborne.
How's it going, man?
What's up, man?
Dude, happy to be here with you, man.
Dude, super long. Yeah, it's been too long and super crazy how we we're doing this podcast. It was literally like 2 hours ago.
Yes.
I texted you because I was talking to Heather Blankenship, who you had just met recently in Maui. And she was like, yeah, well, all these people are in Vegas. Like, it's weird. AJ's here. I was like, what? AJ's here. Let me text this guy real quick. And I was like, you need to come on the podcast, boy.
I was like, I'm there.
Dude.
Came over.
Awesome, man. So why don't you tell everybody a little bit about your story, man, because it's super inspiring.
Yeah. I've been always interested in business and investing and wealth creation forever. I think I probably got it from my dad. And I was in insurance. So we did like brokerage sales. We worked with companies and their medical benefits and self-funded dollars, things like that. So I loved sales because it was a way for me to control my income, right? And it was a way for me to, I viewed it as, if I'm selling, I can make more money, right?
Right.
And that's kind of how I got started. It was all commission-based, so a little bit riskier overall way to generate your income, but I could make a lot of money. And that works until it doesn't. So I was always looking for a way to diversify, and that went through buying other brokerage firms as well as it was to expand into other assets. And I like you, the business side of things. I like looking at business models, finding opportunity, and I got really into things like roll-ups, which essentially means that we built a mothership and you could roll up different companies within the mothership, and just by sheer fact of you buying them, you got a higher multiple on them. And this was something that I learned in insurance as we built our business, and you could buy these smaller ones, and they're, let's say I'm buying them at a 1.5 times multiple.
Okay.
But ours is going to sell at like a 6. So I could buy them, and immediately the value of that asset changed from $1 million to 4. Right?
But they have to be in the same industry.
Same industry, exactly.
Okay. All right.
And looking at that, to me, particularly being young, it was like almost like financial magic. And I started looking at industries where this works well and different things that this happens in. And really, it's thriving in a consolidation environment. So where assets, ownerships are fragmented, and then they start consolidating and rolling up to bigger things, and that happens quick. And that got me interested in self-storage, weirdly enough. So self-storage was an industry that was extremely fragmented, and it was operation-based, and the performance of the asset was very much determined by that operator. And so we could buy it and roll up other storage facilities, and you get things like portfolio value, but we also got leverage on operations. So I'm doing this, looking at other businesses, doing these roll-ups, buying storage facilities, and that was working awesome. And we were doing this for quite a while, and then out of nowhere, I became paralyzed, out of the blue, completely random. We had no idea what was happening. My legs just stopped working, and went to the hospital. Within a few days, I was being put into a coma because I lost my ability to breathe. And then when I came out, I was paralyzed from head to toe, eyes all the way down, and laid like that on life support. And I was intubated, so living on tubes. And I lived in the hospital for a while. Then I lived in an LTAC, a long-term care facility, to take care of people like me. And then over the last 4 years, I've been slowly coming back. And it's been an interesting journey, to say the least. Not one that was expected, but one that I'm grateful for. Came out of my wheelchair, started up 2 other companies, and started buying up and scaling that much more. It was put that much more of a drive in me.
Yeah, dude. I remember when I first heard your story. It was in Maui 2 years ago for Brandon Turner's Mastermind, and I remember you told your story, and just to see you then already how far you'd come, because I think you still were kind of in crutches and stuff.
Yes.
In Maui.
Yeah.
Still recovering. And you were still killing it, in business at that point. So that was probably 2 years after the incident. Mm-hmm. And then now to see you today, dude, I mean, you're just walking around like, I would have never known that you were in, these braces 2 years ago.
Yeah. Yeah. It's been a wild ride. It's a slow one, 4 years, but I'm not 100% back. I can't quite run, and I still have paralysis in my lower legs and, pain, things like that are just continual things that you deal with. But overall, we could not obviously be more happy where we're at now. We think it's nothing short of a miracle, and we're so pleased that the fact that I'm walking on my own. And that was the goal. It was like, hey, listen, I can deal with a lot of things, but I just want to be able to walk on my own again. And that was a simple but powerful goal, and we just kept working towards it. And today I'm walking. I don't have leg braces on, and I don't need my crutches or canes or any support at all.
Right. Yeah, that's just to see it is crazy. For anybody watching this or listening to this, the world's changed a lot since the pandemic, man. People, I think, have really learned to value their health more. And you kind of went through that 4 years ago. How do you think the pandemic has impacted how you've operated? Has business gotten better? I know it's gotten better for a lot of people like myself. How's it affected you?
Yeah, it's gotten better. It's gotten better because I think that in the midst of the fear and the crisis, I was never really affected by that, and we were able to make big moves. And there was a short period of time in the pandemic when markets seized up, and we bought big office building on downtown, major exits, 5 acres. We bought land, we bought assets, and I mean, this was only a 2-month period of time, and we just were in a position where we understood the market, and we just weren't going to be paralyzed by fear. And that just carried through the whole pandemic. We're going to adjust. We're going to keep moving forward. And we're not even going to break stride. And that played out very, very, very well.
Yeah. What made you want to continue buying when everyone else was kind of not doing anything?
Yeah, right at the first when everything seized up and then we started to see the financial market seize up, there was two fundamental things. And, for those of us that were in business and investing during the Great Recession, I remember that time, obviously, and what businesses were doing, and I was consulting with them, and a lot of them were going bankrupt. And remembering saying, what are the tools that our economy will use? What is going to happen through this process? And how's it going to work? And at the time, there wasn't a playbook for that. The only playbook was the Great Depression, and that was not one they wanted to use. And so they came out with these big bailouts and quantitative easing programs, and they set the format or the stage to what would be played out further. So first, when the crisis came, we knew this won't last. It may be a long time, but they're going to figure out, they're going to get a vaccine. We're going to figure this out, right? And so we can endure that. We can last it. But two, we also knew the government's not going to let the economy fail. So they'll go into debt to trillions of dollars, and they'll just start bailing everyone out. And that was just very clear and known to us. So for me, I was like, oh, hey, look, we got a quick fire sale going on. Let's buy everything we can because it's not going to last for long. And it changed. I wish the financial markets would have seized for a little longer so we could have got more buys. But, oh well.
What's funny is I said the same thing. I was like, dude, if anyone thinks that the government's going to shut down the economy and not give all these bailouts, you're sadly mistaken.
Yeah.
You can't just force businesses to stop and then not basically reimburse them.
Yep.
So I took the same bet, bought a ton of flips. Wish I would have got the long-term investments like you, because those are what's going to really pay. But it's funny looking back at it in hindsight. Now everyone's like, oh, well, yeah, I knew that. It's like, no, you didn't. You were scared.
Everybody was.
Yeah.
And right when it first shut down, it was from a overall perspective and health and everything else like that, it was terrifying because there was so much uncertainty in the air, right? And the fact that I think as an entrepreneur, as a business owner, you just have to be really comfortable saying, I don't know. And I'm moving forward. I have my playbook, and even though I don't know what the outcome is, I'm going to make the best decisions possible. And I also think that it's funny because everybody prior to that had been saying, oh, I'm going to wait till the next 2008, and then I'm going to make my move. When COVID hit, none of those people made a move.
They did not make their
Nobody
move.
did anything.
Right.
It was always, they all froze up or anything like that. And you look at it and you go, it's not about knowing the outcome. Of course, we say we would do it if another 2008 came because you're thinking that you're going to anticipate that. But you don't when it happens. In 2008, nobody knew it was going to happen, and nobody, we weren't anticipating it.
Right.
So the fact of the matter is you just have to be comfortable with uncertainty. And that's what we did. In 2009, 10, we started buying everything. We thought, this is weird. Why is the markets reacting this way? And so we started buying things that were pennies on the dollar in commercial assets, and people are like, what are you doing? We're in the middle of a real estate crisis. And they're like, you're buying these things and they're going to zero. And we're like, listen, long term, this makes fundamental sense. So we're just going to do it. And we tried to be comfortable with uncertainty and not let fear grip our minds.
Yeah. You know what's funny is that you said real estate going to zero. And it's like, yeah, that does happen with stocks, but I've never seen a house go for, it doesn't go to zero.
No, doesn't go to zero.
Yeah.
And
well, maybe in Detroit. But
exactly. Maybe you can plow. But still, there's land there and it can be sold for something. You just plow the house down.
Yes. Yeah. But even in Vegas, man, I wish I had some money back then. It was like, all right, this brand new house built in 2007 was selling for $300,000-$400,000. And then in, 9, 10, selling for $70,000-$80,000. And people are like, it's going to go lower. I'm like, how? The house is brand new.
How?
What's it going to do?
Yeah. I mean, we were buying up acreages and nice place and building houses, and everybody was literally like, are you crazy? What are you doing? We built our whole house and we did everything in, it was 3 months or 4 months because nobody had work. So everybody just built it up real quick.
You know what I have found, and this I think is going to be a great soundbite for somebody, but what I have found is when I'm crazy and people think I'm crazy, that's a good sign.
Yeah.
Because every time I've ever done that where I just did something and everyone's like, you're crazy, that's dumb, you're going to lose it all.
Yeah.
It always worked out.
Yeah.
Big.
And I think that it's important, like the people, when you're moving forward, although people say it's crazy, it's not crazy to you. And it's that inside knowledge and confidence, not that comes out of nowhere. It comes out of you're a practitioner, your skills, and how that is applied in certain situations that allows you to see a clear path. You don't see the end. You don't know.
Right.
But
all you're doing is making a bet.
Exactly. I'm moving forward, and the odds are in my favor.
Yeah, that's it, right? Everybody wants certainty, which is never there.
It's never there. It never will be.
I'm actually reading a really good book called, it's by Annie Duke. It's like Making Bets or something. Man, I got to find it now. But essentially what she's saying is that most people want to live every decision as black and white. Like, I'm 100% certain or I'm not. Yep. When in reality, it's never like that. No. It's always like, I'm about 80% certain that this is going to work out. There is 20% that says I can't, but I'll take those odds.
Yeah,
and that's kind of what you and I both saw during the pandemic, was like, none of us knew for sure that, hey, they're going to for sure do this easing and all that. But based on our experience, we're like, hey, my guess is I'm betting that they will do this.
They will.
They're going to lower rates. They're going to do these things because historically they have always done that.
Yep.
And so the bet was right. We look smart. But I think anytime I've ever wanted to make those bets because of prior experience or just watching the world unfold and, being influenced by other people around me who are very smart and other things, you start to form your own opinions. And I think you got to just trust your gut.
Yeah. I've really come to that conclusion that it's like, there's certain people that we listen to on certain things, but at the end of the day, they're my decisions, they're my responsibility, and the consequences are mine. And as long as I'm completely aware of all of those things, I can make a good enough decision for me and what my gut's telling me to do. And it's not that things have always played out so I'm confident. That's not true at all. I've made bets and they have failed not only big, like catastrophically big, like lost everything and lawsuits and everything, like miserably failed.
Right.
So it's not about being successful all the time. That's not what it's about.
Right.
And it's not about being delusionally successful because of luck. That's also not what it's about. It's an understanding of risks, abilities, and taking those odds and moving forward.
Yeah, dude. It's literally what you're saying is what that book talks about. It's called Thinking in Bets. Highly recommend it. I'm not even done with it, but it's literally what you just described of, people say life is like the game of chess. It's like, no, in chess, the best player always wins.
Yeah.
There's not really luck involved. There might be a misstep that the player made that may allowed a weaker player to win, but it wasn't because they got lucky. She talks about Texas Hold'em being a game of, really being the game of life. Like, hey, you can make the right moves and you can have skill, but you can lose.
Yeah.
Luck can allow the weaker player to win, like, often.
Yes.
You can get bad beat many times, but in the long run, if you're great and you have great skill and you make the right decisions based on the odds and you're usually in your favor, you'll win in the long run. You're going to incur a lot of losses along the way, but when you look at the totality of it, you should always be far ahead based on your skill.
Yeah, and that's, how I view it when we're making decisions. Really what you're trying to avoid is the risk of ruin, right? You're not trying to avoid losing. You're not trying to avoid making bad decisions, screwing up. You're trying to avoid the risk of ruin, as in it takes you completely down. You're bankrupt. You have nothing left. Yeah, exactly. Yeah. You're not doing that, right? And I find that good entrepreneurs and good business people, like, loss is an accepted part of the process. And so mitigating that risk, accepting it, bringing it in, and knowing when to call those things, call the bet and say, hey, I'm out.
Cut your losses.
Walk away, and when to double down. That is a skill that you get better and better and better at.
Yeah.
And it's really interesting. It's not about getting rid of luck, like you said. It's really managing luck and risk as you're playing the game.
Yeah. And that's why she says Hold'em is very much a very good metaphor to determine life, because all those analogies just used. Okay, we're gonna double our bet. We're gonna fold. You know what? We got all this money in the pot, but it's not worth continuing down this path because I want to still stay in the game.
Yeah.
And you can recover.
Yes.
You can lose a lot of chips and still recover. You could get very lucky and win chips you didn't deserve.
Yep.
And I've been the recipient of many lucky things. So
Yeah.
I've been unlucky.
And two, when we say luck, you also got to realize that you create your own luck by showing up at the table, playing the game.
Yeah.
And that's the thing that a lot of people don't realize about life and about business and economics is that the players show up at the table. That's why you see people that run businesses and they could be idiots but still successful. And they're like, oh, well, they don't deserve that. They're not smarter than me. And they're like, yeah, but they showed up and they played the game.
Yeah.
You didn't.
You can't get lucky on the sideline.
Doesn't work that way.
Right.
So
I'm with it, dude. Trust me. You hit the nail on the head. For all the naysayers, they had their shot during the pandemic. They didn't do nothing.
Yep.
Right? Now they're once again waiting for their shot.
Waiting for their shot. And I can't tell you, after 2008, every person that I knew, oh, I'm gonna buy when the market dips down again. Like for 10 years, and it's funny. I actually said it was, I think, a year ago or 2 years ago, right before the pandemic. I said, remember all the people that 10 years ago said, I'm gonna wait to buy the dip. Now at these sky high prices of real estate, now all those people are starting to buy, right? And you can see it in housing starts, you can see it in buying and things like that. And when you look at it, you say, it's not about timing. So people go, oh, should I not be buying? Like I say, I'm buying now. I'm buying at scale.
Yeah.
I buy in the downturn, I buy in the up, and I buy when it's sideways, right? That's the point. I'm
long as
playing
I'm
the
getting
game.
a deal.
Exactly. As
Yeah.
long as I'm getting a deal.
Yeah. And you have multiple exit strategies. If things do hit the
Yes.
fan, hey, I've got a plan for that. If things go up, great. If things don't happen the way I want, I can hold it. I can do whatever.
Exactly. Managing that risk.
Yeah. This is something that has kind of screwed me up is I talk about trusting my gut, and my gut has always led me to the right path. And my gut is not just like emotion based or just like no thinking at all. My gut is based from my own experiences, how strongly I feel, my faith, the things I know. Like that's what I call my gut.
Yes.
Now, I've had many mentors and people who are far more successful than me, tell me different things. Like, especially like I'll take the pandemic for an example. I'm in a group, ton of, really successful guys are like, dude, you got to take everything off the table, like sell it all, move, blah, blah, blah. And me and my gut, I'm like, hey, I'm not really buying that. And, their thing is, well, you didn't live through 2008. Like, you don't get it. You're young, blah, blah, blah. How do you rectify that?
Yeah. So
the experience gap and knowing when to trust somebody else's opinion.
Okay, this is a really good question. And it's one that a lot of people can get lost in, especially starting out, and they start to trust other people's voice. Just because someone's successful doesn't mean they're right. That's the first thing we got to understand and we got to know. For me, I get really worried when people talk in absolutes. Like they absolutely know. I'm doing all of it, and this is exactly what I'm doing. I immediately discount that because I immediately say, you are so involved, passionate, believe it so much, you're not allowing room for you to not be right.
You're not objective.
You're not objective anymore. Yeah. And I ignore those people because it doesn't mean they're going to be right or wrong, but that's not the person I should be listening to.
You want to hear somebody who's considered all points of view
and options and alternatives and is also planning for them, because they may be right for them, but that may not be right for you.
Yes.
That may not be right for you. Perfect example is if you are doing, let's say, land-based speculation and you're buying up land and you're really needing that land to appreciate for whatever reason, and there's something in the economy that could make that land depreciate, and I'm doing storage facilities, and this guy's on CNN talking about now's the time to sell real estate, that doesn't apply to me at all. It has nothing to do with me, right? And so it's this formation of you're taking people that are directly involved, know what you're doing, taking what they're saying into consideration. Because also you need to, we rely very heavily on people that are smarter than me. Right. But people that I find that are really, really smart don't ever talk in absolutes. And they're
willing to change their mind,
they're
too.
willing to change their mind.
Yeah.
And they'll advise, they'll look at things, and I take it into consideration. So one of the things we may do is if I have a bunch of smart people telling me something, I may either scale back or I may apply it in a certain way into my business, but I don't adapt other people's reality to mine. So I don't accept your reality of a given situation because your reality is different. You have different partners, financing structure, assets, business interests, and everything like that. You have so many inputs that aren't my inputs. How can I expect the output to be the same? That's not logical. It doesn't even make sense.
No, not at
So
all.
it's like, no, I'm not going to do that. I'll take your input and I'll apply it into mine.
Right.
But that doesn't mean the output will be the same as your output. And I think that's really important to do.
Yeah, and that was the conclusion I came to during this whole pandemic was that these guys who were telling me this were already set in life. They're old, they're chilling. For them, the risk was not worth it, right?
Yeah.
Like, they're like, dude, I've already worked hard, made my money. Even if I miss out on a big opportunity, I'm okay.
It doesn't matter.
Doesn't matter. And I understood that that was their point, whereas I understood for me as a young guy, this is my chance at 2009, 10, where I'm going to take advantage while everybody else sitting on the sidelines. And if I'm wrong, I'm also in a different spot than them, is that I'm young. I can recover.
Yeah, exactly. 100%. The upside is disproportionate to the downside. So when we're talking about bets, things like that, you also have to include in time. So for us, we're in our prime.
Yeah.
We're going out and we're hitting it, and we have decades. Well, when you change the viewpoint from decades to 5 years, me and you would start acting extraordinarily different.
Yes.
Diversification and lowering risk will be of the utmost importance. And we are out of creation mode. And you got to take those things into consideration. Although we always should be protecting our wealth, which we are both actively doing, right? It's also, though, we're putting more chips on the table because we have more time to play the game. So the odds are more in our favor than somebody else that doesn't have so much time.
Yeah, 100%. I think because we're in our prime, like you said, and we're younger and we're active, we're more in tune with what's going on with, I guess, the future in the world and, you know, whatever, tech, social media, these things that maybe the older generation's not in tune with. It doesn't really make sense for them to do what I do.
Yeah, not at all.
Yeah.
And their benefits won't be the same. Like when you look at what you're doing and what other people are trying to do, also, you're building a foundation for something great. And you know that, hey, we have these new materials to build a foundation that will allow us to scale even bigger. The material to build that foundation for somebody else that already has their structure and their building makes no sense at all because I'm not building a foundation. I already have my structure. I'm living in it.
Why do I need to redo this?
Right? I don't need to redo this. Me and you, we're taking all the new materials we can get that'll make it so we can build bigger, better, faster, and we should be applying them. It would be irresponsible for us in our businesses to not apply them, where for them it's the opposite. What, am I going to start tearing down structures to build something new?
Yeah, I ain't got much, and I can't even use it that long.
Yeah, exactly.
Yeah.
I'm enjoying what I got.
That's kind of how I view social media and everything right now. It's like, man, okay, we all understand that this is the future. Super important. It's only going to continue to get bigger and bigger. And they're like, man, like, is it really worth it? People ask me this all the time. They're like, is it really worth it? And I go, for me, it is.
Yeah.
I can tell you for sure it's worth it. If you're young, for you, it's worth it. Like, because you're going to reap the benefits long term. But, you know, if you're older and, you know, you've already got stuff established, it may not be as valuable to you as it is to me.
Yeah, your ROI may not be as big.
But I still think it's worth it. And a good example I always tell people is look at Grant Cardone. Okay.
Yeah.
That dude's 60 something, right?
Yeah.
He started getting heavy on social media maybe 5 to 10 years ago. Been pretty good for him.
Killed it. Yeah.
Even as an older guy.
Yeah. Well, and, you know, when I look at, so traditional businesses, when we're talking about how you build them, how you run them, you have things like intellectual property and proprietary information, right? This comes in the form of communications through traditional method of salespeople, marketing materials, commercials, things like that. But they're still distributing and they're building out their brand awareness through their IP, right? And through their secret sauce and all that. So what you're doing is the exact same. You are building what I call information assets, right? You put out some information that creates an idea or a theme around it. It draws attention to what you do good at. It's the exact same thing that the other people were doing. We're using intellectual property, and we're using our ability to communicate and market those ideas through different mediums. But at the same time, it's no difference than the sales guy that shows up at a home with a pamphlet, right? That's all prettied out and curtailed, and they're talking about their secret sauce and what makes them better. It's the exact same thing. It's just a different medium, and it's much more effective. And,
Dude, you know what's funny about that is, that used to be the old way of getting your stuff out there, right? Like, let's go door-to-door sales. Let's hold a free event, right?
Yep.
And I'm like, okay, those are cool. Like, I mean, you might get 100 people at the event. Like, that's 100 potential customers. And then you think, and then they took it to another level. They started recording their events and then distributing it, that way. It's like, all right, that's a great way to scale. And now you look at social media, and I look at my views in the last month on all my platforms, millions of views. Why would I ever try and hold an event for 100 people?
Doesn't make any sense.
It's just dumb.
Yeah, it makes no sense at all. Like, it would be, once again, irresponsible for your business for you to even do that.
Yeah.
It's a level, and we're lucky that we live in a day and age that we have access to these tools, that we have access, that anybody does. It doesn't matter, anybody. Anybody can literally start talking to an audience of thousands of millions of people.
Yeah.
And
you could buy ads. You don't have to do it organically.
Yeah, you don't have to do it organically. We do a mix. So for us in our business, we do ads. We have ad spend, right? We do organic mix. And when we're doing direct marketing at like our locations, for example, we get asked all the time, so how do you break up your marketing dollars? And I'm like, it's all mobile. There's nothing else that matters. Everything else is irrelevant.
Yeah.
And it's like the numbers prove that that's true. Every dollar that is not spent on mobile and is spent on another way, I'm getting multiples less return and value out
I don't
of
need
it.
TV commercials.
I don't need anything. I don't need direct mail. I don't need
just give me Facebook
events.
ads.
I don't need yellow page, on and on and on and on, right? It's like all I need is mobile app or mobile direct marketing spend. That's it.
So, you know what I've thought about? Actually, we got to cut to our sponsors real quick. I'll tell you guys kind of what I've been thinking about. Let's hear a quick word from them. Have you ever wanted to invest in real estate, but you didn't have the time to find deals yourself? That's where Fundrise comes in. Fundrise is a crowdfunding platform that has transacted over $5 billion in real estate and has over 150,000 active investors. While many funds, like my own, require accredited investors, Fundrise allows anyone to invest with as little as $500. If you'd like to learn more, check out fundrise.com. Once again, that's fundrise.com. A quick word from our sponsor. One of the best ways to get off-market real estate deals is through cold calling. And if you want to reach as many people as fast as possible, then you need Batch Dialer. With their predictive dialing technology and built-in CRM, Batch Dialer is one of the top dialers in the industry. You can switch between single or multi-line dialing, as well as do voicemail drops and call recordings. And for being a listener of The Ryan Pineda Show, you'll get a 7-day free trial. Just go to batchdialer.com/Ryan. Once again, that's batchdialer.com/Ryan. Now, back to the show. What I've been thinking is happening is that with this way to exponentially grow through social media and stuff, where my message can now get out to millions with literally posting, I don't have to spend, weeks planning an event, getting a venue and doing these things, or, coming up with all this stuff. Like, I can literally go get millions of views like that tomorrow. My perception is it's increasing the gap. And people talk about this wealth gap of like the rich and the poor and the middle class is going away. And I think tech is causing that.
It is, to a large extent.
Yeah, because it seems to me like the best performers and the most talented will just be amplified significantly while everyone gets left in the dust.
And tech in its nature are aggregators, right? So if you look at social media, they aggregate all the people onto one simultaneous platform. That's why if you look at the top 10 largest companies in the world, we're now at 90% of them are all tech companies.
Yeah.
When I got started in business, there was no tech companies on it. None.
It was much more evenly dispersed.
And it was typical industries, things like that. That's not how it works anymore.
No.
And the users on these platforms benefit from the aggregated nature of the business models. So now I get to talk to this stack of people, and the high performer ones, that single person or algorithm, let's call it, is incentivized to send the entire stack to that. So you aggregate and then you move that people in one big wave. And so it consolidates and amplifies the best performers in a way that we've never seen before. Like like you used to have top performers in every single city, right? And so you would have let's say a Grant Cardone or something like that in every regional city. That's how it worked. And you knew them because of the local business environment. You knew them because of people that talked. Maybe you knew them because of TV ads, but it was a social network that was built into the fabric of the city or different things like that. And that has all been disrupted. And that changes the platform to where instead of cities, it can be nationwide, which is just then aggregated and taken from those others and built it in. It is like we talked about earlier that I really liked business models that were wrap-ups into other things, right? And social media does that for people, right? It broke down the traditional barriers that one has to go through and get to compete in a market they're not familiar with, in a market they don't know. Now banks are like, well, I don't know, I'm not going to give you money, or finance. We were just talking about this. How when dealing with large institutional capital people, they're so used to being the barriers to capital that their terms are outrageous. Because what's happened is they consolidate the wealth through their branches, through whatever it is, capital, through their funds, through all of that kind of stuff. Then they disperse it out to operators. And you have to play by my terms or I don't give you access to that capital. And when I got started, there was a lot of people that wanted to give really, really big capital to us, hundreds of millions. And the terms were outrageous. Like I was telling you before, at the end of the day, I was their employee. Like it was like,
you're doing all the work making.
Exactly. They've never even been in the asset class. They're not experts in anything. We're the leader in the industry. We're the experts and they take the lion's share. And we said, well, hold on. Why don't I just reach out to my following? Why don't I just reach out to the people that know I'm the expert? And that's worked massively well. And people are sending us their money, and I don't have to go through those traditional means to acquire that capital.
You know what's funny is many of you guys know I have Pineda Capital now where we're buying apartments and other things. And if you want to invest with us, you can go to PinedaCapital.com, quick plug. But what I learned from capital raising is I talked to some of these old school big institutions, like you said, and they're like, oh no, like there's no way we're going to invest at those terms. Like we're talking like 50-50 where to me, I'm like, dude, this is an equal partnership together. Like this is great. I feel that that's fair. And in fact, it's much more investor driven than say my flips where they get no equity, right? They're just getting interest. We've done that forever. And these guys are like, no, we want 80%. I'm like, wait a minute. I'm going to do everything. I got to find the deal. I got to pay my salaries to my employees. I got to pay the overhead. I also have to sign a personal guarantee on this loan. And you want 80%? I'm like, you lost your mind.
And they used to be able to get it.
Well, but then their response to me is like, well, you've lost your mind. There's no way you're going to raise. I'm like, I've already raised it. What are you talking about? Like we bought this building already doing exactly what you said. But the other part of that is, it's disrupting the industry so much that now normal people have access to these deals that they never had access to before. And so my followers, my friends, my family can get in on these big, juicy returns, even at 50-50. And they're happy to get them. Unlike these guys who are like so greedy that I'm just like disgusted.
No, absolutely. It's crazy. And you can sense that entitlement when you talk to them. You can sense this idea that it's like, this is the way it's always been done. And you're sitting here going like, we have over 2 million square feet. We're developing projects at 50 million a piece in construction. We've got, over 200 million in assets that were about 500,000 square feet, everything. I could not have done this without going through traditional means. Literally, probably 8-9 years ago. And to think of what I would have had to give up to do that is staggering to me. And what I, first of all, control completely, and also the split, but to think of also who would not be able to invest with me. So I have multiple people that are going to be financially free from me, that will become millionaires from me.
Right.
And they would have never had an opportunity to do that when I was if you're using institutional capital. And I think, like you were saying before, they can now directly invest with you alongside. That's incredible. And it's something I don't think has caught on. It obviously is catching on. Lots of people know about it, anything like that, but it hasn't taken hold like I think it will over the next 10 years, that the options for individuals are just going to be staggering to put their money with the top people in the world at doing that thing without ever having to go through funds or through other people.
Yeah. No, I'm with you, man. The world is changing so rapidly now that if you just are stuck in the old way of thinking, you're going to get left in the dust.
Yeah, doesn't work.
Yeah. But to go back to the whole social media thing, just kind of what I have seen, and you just said this with the tech stock companies, like, dude, these tech companies make up they call them the FANG stocks, right? They make up a disproportionate amount of, the total market share.
Yeah.
And they're just a couple of companies that have that much power.
Yeah.
And I see that on social media too, right? Like the cream rises to the top.
Yep.
And it's actually, it creates a huge gap, but it's for the overall viewer experience, it's better because the algorithms know that, hey, this guy's good.
Yeah.
Like you want to watch him.
Yep.
This is what you're looking for. Here's the guy. We've already done all the research for you.
Yeah.
We're going to recommend him for you. Like, it's great. If it wasn't like that, how hard would it be to find the right
good
things?
People. It'd be a nightmare. And you're right. With tech, we have this catch-22, right? And it's been a massive wealth transfer, and we've seen this. But with tech, the good also comes with the bad. Society has not caught up how to really work with these tech companies. Individuals haven't, life hasn't, capital hasn't yet caught up really how to work within this. And I think over the next 10 years, we're going to see massive change within the overall structure of how these tech companies are run, how they do business. And it'll be very interesting to see how this plays out because they've gotten so disproportionate that it took everyone, governments and society, off guard. It really was shocking.
Yeah. Well, I just think the disproportion will continue to get wider as everything gets smarter because it's just like that's what efficiency leads to.
Yeah.
It's just like, hey, this is the best thing. Like everything else is irrelevant.
Yep.
It's just like there's one winner.
Yes, exactly.
And you see that with Airbnb, you see that with, all these companies. Yeah, I mean, there's a couple of other players, but everything else gets left in the dust.
Completely. You've hit it on the head. That itself is not going to change a whole lot, and it's going to accelerate. And when you look at that acceleration, and when you look at what that means, for me, it was like, hey, I want to be that aggregator within self-storage. Right. So I was like, I identified that and said, hey, I got to go. This is my thing.
Yeah.
This is my thing. This is what I got to do good at. Right. So I started putting out books and content and quickly rose because there was nobody yet filling that spot.
Yeah.
And
hey, you want self-storage? I'm the guy.
Yeah,
like,
exactly. And it was like, that mode works really well. And I tell people, I'm like, you want to be really successful today, find an industry, an asset class or something that there's no clear market leader. And when I say market leader, I mean individual.
Right.
Not company, individual. And go into that space and make a name for yourself, document everything, produce content, build a brand, an image, and you will, it's like literally having all these massive tech companies work for you.
Yeah.
Because they'll push you up, like you said. The cream will go up to the top, and it'll naturally push you up, and you'll rise to it.
Yeah, and that's what's exciting for, I guess, me anyway, right? Because I'm a naturally competitive guy, and so if I'm not rising to the top, it's not because I'm freaking like getting screwed, or it's just like, dude, I got to do better.
Got to do better.
And people can look at it and say, man, everyone's not getting an equal chance. It's so hard to grow. And it's like, well, there are some people that got in earlier, and they've been working at it way longer than since you've been trying to work at it.
Yeah.
And there's just but I do think everyone has an equal opportunity to grow
more than
extremely
they ever
fast.
Did. I don't think people understand how hard it used to be to start and run businesses.
Yeah.
It's like today, it's like, oh, I'll get popular real quick on Instagram and sell shirts. Right.
Boom.
Like it's incomprehensible to a whole generation of everything you had to do to start a business.
Yeah.
How the banks you had to use, the brick and mortar, the employees you had to hire, the laws, the regulations. It has never been easier to get started, but you have to differentiate yourself. You have to do something different. You have to have a voice, and you have to break through the noise. Today's generation isn't about starting up. That's easy. Starting a business now in today's age is just nothing. It's about breaking through the noise.
Yeah.
It's about setting yourself apart. And this takes a creativity level that can be lots of times hard. I know that's hard for me to do. In my brain, I'm like, oh, I'm an investor, a wealth manager, a business person, and thinking creatively, but I had to change my ways and I had to start doing things differently to compete, like you're saying.
Yeah.
And that's what it's all about. You have the opportunity. Everyone does today. It's super easy, but you need to get out there and make it happen. You need to compete. You need to do something different. And you shouldn't expect that what's working for them should automatically work for you. It's not how it works.
Yeah, for sure. It seems to me that the way tech and social media and things are going, it's very much like sports. When I was coming up through the minor leagues, some guys got better opportunity than others, whatever. But at the end of the day, if you were putting up numbers, you were going to move up. The team's going to move you up, or if they won't, somebody else is going to trade for you or sign you and give you a shot. And you just keep moving your way up. You move your way up. Eventually, you get to the pros, right? Or the big leagues and the top of the top. And then, those people even rise up. You got the all-stars and the MVPs and whatever, right? And they are the ones who get most of the publicity.
Yep. Sponsorship.
The sponsor, the cream rises to the top. And it happens in a very transparent way with statistics.
Yeah.
And when you look at that for social media, the same thing happens. Those algorithms are literally just looking at your statistics and saying, what's the watch time on this video? How many people are clicking on this video? And they're just using stats to push you up.
Yep.
So I actually like it.
Yeah, I do too. I love the new era of wealth creation, investing. I love the creativity, the options that people have. There's never been a better time. And the thing that I love about business and investing overall is in sports, you really have 1% that make any money. And then generally speaking, most everyone else in the whole entire sporting world of that industry doesn't make money, right?
Right.
I'm sure a lot of people thought that you were a multi-millionaire because you were playing, right? And you're like,
no,
that's not how it works,
no,
right?
I'm broke.
Exactly. And so it's when you look at it, in business and wealth, you don't need to be the number one to be financially free, to be wealthy, to be anything like that, right? You could be playing in minor leagues or little leagues and you're still making a living, right?
Right.
But there's a chance and an opportunity to just go disproportionately large.
Yeah, it just goes back to, you're right, it's going to still have disproportionate incentives where some very good baseball players, the top 1%, are still stuck in the minor leagues making nothing, while the top guys are killing it.
Yep.
You see it in boxing. That's a huge one where, man, there's only 5 guys making money.
Yeah.
Everyone else is
crazy.
Not making anything.
Yeah,
just grinding to be one of those 5.
Yes.
So I for sure see that trend continuing in all aspects of business. And it's scary for some people because, I could see it discouraging people. Why should I even start social media? Why should I even start a business? But the reality is, even at a small level, you still can make a lot of money. We're talking about just being the ultra.
Yeah, ultra.
Yeah.
No, you're exactly right. And the thing about it is why should you start? Oh, why not? Are you kidding? It's so easy. Hey, think about this. Think about what your marketing budget to get what you get today would have been like in 2004. Could you even imagine?
A lot.
To get millions of people that your reach and your view that you've created?
Yeah.
Here?
Be a lot.
Yeah, I can't even imagine. Like, you're talking
And there was-
Super Bowl ads.
Well, and there's no way to organically do it. Like you would have to just
you pay. You pay to play. That's your only option. So
Yeah.
everyone out there is saying, why should I do it? Because you can.
Well, you brought up a good example of, get famous on Instagram, go sell some T-shirts. Think about starting a T-shirt company 15 years ago. You freaking have to go get a factory. You got to go find a supplier. You got to pick a shirt, pick the logo, figure out how you're going to ship it, put a huge order in, get some overhead, right? Like
Brick and mortar. You got to have
brick and mortar
employees
to sell it.
Yeah.
You got to buy the ads, and you don't even know if it's going to work.
You have no idea. The risk was astronomical.
Yeah, and
It was-
not a huge return on T-shirts.
No. And all this stuff, too, this cost upfront money. Like, a lot of people don't understand. Like, when you built something, then you had to pay the bills up front. Like, and we start online companies, and we can literally test and sell products before the products are even made.
Well, and that's
it costs like nothing.
Yeah, and that's the whole point of the T-shirt company now was, dude, there's already companies that'll do all that for you.
Yeah,
and you
everything.
can just literally go on their website, like Teespring. You can go on Teespring, throw your logo on it, throw that link up to people, just see if people like it.
Yeah.
And it's done. And they'll ship it for you. They'll do
It's
everything.
like no risk.
There's no risk.
It's pretty incredible, and I don't think a lot of people understand it. So why you should do it is because you have the opportunity, and also too, these things are getting more. Old industries are consolidating into new industry, and it's just going to keep going. So the the percentage of people that use Amazon in 10 years is going to shock us.
Oh,
Like, it's
dude,
going to
that's
blow
why
our minds. And then in 10 years, everybody's going to say, I wish I would have gotten in on that trend.
Well,
I
and-
wish I would have done that.
And that's why I started my company, Lunar Ecom, because I know for a fact e-commerce is one of those industries it's already huge, but it's
going to be.
it's going to explode so fast. And like, I already know, like
Yeah.
a couple of years from now, they'll be like, dang.
Yeah, these are long-term trends. And
Yeah.
we talk about placing bets. Well, like I say, I like markets to make me. And what I mean by that is I like the market to make me wealthy. I like them to make my income rise, right? So you need to get in front of trends that can sustain growth and put yourself in the right place at the right time, doing the right things. And that's increasing your odds of being successful.
Yeah.
And online is clearly, obviously, one. And not only just online, but also Amazon as well as others.
Yeah, no, for sure, man. So, every time you and I get to talking, we're both real estate guys. I mean, like, dude, you're known for self-storage. I'm known for flipping houses. Yet, I think what draws us is just business and entrepreneurship in general, which is what I love. Truly.
Yeah.
Is that the same for you?
100%.
Real estate's just kind of like a vehicle.
It's a vehicle.
Yeah.
Absolutely. It's a vehicle. And I love the fundamentals. I love everything about it. But it is a vehicle. And if I wasn't doing self-storage, I would do something else. The vehicle that I choose best suited me in my time, my place, and what I had skills for and ability to do, right? And then I leveraged that and I utilized it. But what I love is the game.
Yeah.
I love playing the game.
Yeah.
And that I'll never stop.
Yeah. No, me neither. I'm like, people are like, dude, when are you going to retire? I'm like, what do you mean? What's that?
Yes. Never.
I don't know what that is.
No way, man. You retire, you die. That's what my grandpa always used to say. And that's the great thing about, too, all the stuff we're talking about as it changes. If you're using real estate as a vehicle, right, which I think is the best. If you're looking to become financially free, real estate's the best, simplest, because of the market forces, everything we've been talking about, right? The market will make you, and you can create consistent patterns and do things consistently over time. You will be successful.
Right.
Like, a lot of people have become multimillionaires just because they did a basic formula, and over time they were made multimillionaires, right? And I think that's the thing that I just love about real estate, and I love about real estate investing overall, is the complexity isn't there, or not the complexity, the odds. We talk about odds. We talk about the risk, right? But putting yourself, and you can measure a lot of those odds and put yourself in the right place. And over time, as long as your strategy's good and you're not doing something crazy, right, you'll be successful.
Yeah. Well, you said the simplicity of real estate. And it's true. It's like, literally, it's the simplest plan. If you just go buy a bunch of houses that get cash flow, You'll be a millionaire.
Yeah.
Like there's nothing else to it.
No.
You don't need to flip. You don't need to
you don't need
wholesale. You can literally just buy any house that cash flows. And if you can sustain it, you'll be a millionaire.
Yeah. I looked at like a lot of people coming out of college, like, what should I do? Go buy 2 fourplexes. And then in 30 years, once they're paid off, there you go. You'll retire because each one of those units is going to be renting for $4,000 a month.
Yeah.
And you will have no debt.
Yeah, 30 years
and
from now for sure.
Exactly. Yeah. And so it'll all be cash flow. So you're going to be making $20,000 a month in 30 years and you didn't do anything.
Yeah.
Like, I mean, it's like, and they're like, oh, I don't have the money. Go find it. Like, money is everywhere.
Yeah.
Like, that's not the hard part. Like,
Yeah, you can
everybody
get a
goes back to the money
3.5% FHA loan.
Yeah. Money's the easy part in today's economy. Right now, in 2009, money was the hard part.
Yeah.
That was the hard part. Deals were the easy part.
Yeah.
Right now, money's the easy part.
Exactly.
So that benefits everybody, though. So when you look at it in 2009, if you wanted to get started in real estate because you could find all these assets, but you had no experience in anything else like that, you had to go find people to give you money in the middle of the worst economic crisis since the Great Depression. Today, it takes more work, but you can do the work. If you go out and do the work and find a deal, the money just flows to you. And so,
finding the money is easier today with just
technology.
how connected we are.
Exactly.
Yeah.
Exactly. Great time to be in real estate.
Yeah. Amazing time. You know, one thing I wanted to ask you, you were talking about the roll up and how, you would acquire companies in the same industry. Maybe they're only trading at 1.5. I assume because maybe they were small, they didn't have tech, whatever, that your big company had.
Yep.
You flipped businesses before.
Mm-hmm.
Like what are you looking for in a business that makes you want to flip it?
Wait, that's a great question. Really, I think the easiest answer is operators. So when we look at any business that we buy, I don't care if it's self-storage, I don't care e-commerce, it really doesn't matter. I'm looking at the fundamentals of the business. So if I say, hey, this industry, this business is great. Okay, if I want to get into it, go find all the people that are in that and then find the people that just do a really bad job, and that's who you want to buy. Like, you really shouldn't make it more complicated than that. You find the worst performers, people that are doing it as a side thing, they don't even pay attention to it, like that, and then we can buy it, do very, very simple things, right? And you dramatically change the revenue model of the businesses.
Yeah.
And you can do roll-ups, right? Or you can just better run it. Then you can flip it, and then you can do it at scale, and that's how you build momentum, right? That's how you build velocity of capital. You're moving it around, and you're trading it. And there's lots of businesses like this. They're everywhere, where you have operators that they don't really do anything with the business at all. It's just sitting there, right?
Yeah.
And it makes them some money. They want to get out of it, so you give them 2 times, and they're happy for it, right? And then you can go increase that revenue, and that 2x multiple, you just doubled your money. So I'm really looking for businesses that the underlying strategy of the business is solid, that an idiot's being successful at it, and we can buy it and just run it a little better. And the proportion for the revenue increase to the cost of acquisition is great.
Right.
What I mean by that is I'm looking at a business that's poorly run, but if I buy a business that's poorly run and we run it better and I get a 10% increase in revenue, that makes no sense for me to buy.
Right.
It's not worth our time. But if I can have a business model that you're acquiring and the subsequent increase in revenue associated with the operations is large, or even it can scale or something like that, that's the key acquisition. And I'm usually looking at a multiple, so that's fairly big. I'm like multiples of what it cost me to buy it to justify that risk. Right.
Well, you're talking, 6X and these different things. I mean, I've seen these tech companies, and they trade at 20 to 100X of, what they're actually doing.
It's bonkers. Yeah. It's in.
To me, it seems like tech is, you just have to go tech.
Yeah. It's a huge way to, first of all, you also got to look at the end game. So if you're looking at buying and flipping, who's acquiring it? When Google goes to acquire a company, money's kind of irrelevant.
Yeah.
They're acquiring it because they need it.
Yeah.
And if Google needs it, they're going to get it. So they don't grow by innovating anymore. They're too big.
Yeah.
They just buy everything. And you see what these people pay, and to everybody else, it's like, that is ridiculous, right? Why would you ever pay that for a multiple. Like when Facebook bought Instagram for $1 billion. It was
Pretty smart move.
Yeah, pretty smart move now. And everybody's like, what? That doesn't make traditional sense. So the reason that's important is you got to look at who's doing the buying. So if I'm going into a business to flip it, who is my end consumer?
Yeah, who's
doing it?
Right.
And are they very sensitive to what they pay, right? In tech, the big tech companies, they're not, because they need IP, they need code, they need leverage, they need those things. And the business, you can either grow and become a competitor, or they can just pay for it now and get it over with. So if you're in a business where your exit strategy is to people that are really cash tight, or there may not even be a buyer, obviously that's not a business you want to go into.
Yeah. I actually just we did a podcast with a guy whose business got acquired by Google.
Yeah.
And they acquired him, even though his business wasn't doing that great. They acquired him literally for his labor. Like they wanted the employees and the talent.
Yes. And they do that.
Yeah.
They get to a point where building infrastructure doesn't work. It's inefficient, and you can't do it. So think about, and people are like, that doesn't make sense. And you go, well, think about this guy. He maybe had 20 employees, whatever it is. But these are the top minds in a certain field. Well, for Google to hire or replace those people, the time, effort, and the opportunity cost for them is astronomical.
Right.
So for them to pay an absurd amount is cheap.
Yeah. Yeah, the opportunity cost, it's just not worth it.
Yeah, it's not worth it. Just
Yeah.
pay the amount, get it, and then they'll make you 100x what you paid for.
And we're seeing that even in real estate today with all these hedge funds and iBuyers. People are like, I don't get it. How do they pay these crazy amounts? It's like, dude, they're playing a different game.
They're playing a different game. Exactly. What motivates them and what drives them is not the same as what drives you. So that's why people are like, well, they're buying at 3.5 caps. Should I be doing that? I'm like, can you make good money buying at a 3.5 cap? Because if you can, I guess so. But if you can't, like a normal person, don't do that. I don't know what to tell you here. They're playing a different game.
Yeah. They just want market share. That's it.
They're gobbling up market share. They're thinking in the terms of decades.
Yeah.
They have capital that they have to get rid of, or it gets taxed. So for them, it's an actual net loss if they don't buy the deal. And they have totally different motives.
Yeah. But the good news is, if you can understand who those end players are, you could sell to them.
And they're your buyers.
Yeah,
exactly.
I've been selling houses to hedge funds for a while because I'm
funds are great people to sell to.
Yeah. Like, dude, like you said, if I know Google wants to acquire me, or I know this hedge fund wants to buy my house, why do I think this guy's like my enemy because he overbid me on one?
Yeah. Well, and two, funds, lots of times, they get paid from doing deals. So, like, you got to remember, these people don't get paid unless they do a deal. So, to them, the total returns may mean very little because I'm only getting paid by doing the deal.
Right.
And so they're saying, whatever, 3 cap, I need to get paid, and I got to use this money or I'm going to have people mad at me.
Yeah. It's so funny, dude. I love it. Well, man, it's always a good time talking with you, dude. It's funny because we didn't really even talk that much about storage, but, guys, if you want to learn storage, he's actually the guy. We both have a passion for business and entrepreneurship, but tell people about what you can do to help them in storage. You got a book, great book.
Got the best-selling book in the industry, and we have the largest podcast in the industry by far. It's not even comparable, and it's Self-Storage Income, and you go, and we're open book. So I don't have anything to lose by telling my secrets or anything like that, so we go in-depth. We tell people all about it, what to do, what we're seeing in the market. That's brought a lot of attention and things to our eyes. And we've done everything from building. We bought buildings and turned them into storage, ground up, acquisitions all over the United States. We kind of tell everything we do on there.
Yeah, I love it. So we'll link to all AJ's socials and everything you need to know about him down below. But, man, I just want to thank you for coming out again, man. It's always a great time hanging out. And if you guys aren't subscribed, make sure you subscribe, and we'll catch you on the next one. Peace. Thanks for watching The Ryan Pineda Show. If you want to work with me, head over to ryanpineda.com. You can find my courses, coaching programs, and upcoming events. We also have free resources you can download, so head over to ryanpineda.com.